Right, good morning everybody. Good morning, my name's Tony Lennon. I'm from BECTU, which is a trade union. I can see some familiar faces, so when I ask the question, have you heard of BECTU, I'm going to get yes from some people. Have you heard of BECTU? You know, it's a trade union, works in film, TV, theatre and events. We've got about 44,000 members, and one of the things we do is advise them on all sorts of stuff, including tax, which is the purpose of this morning's session. I've got with me Kenny Sykes, who's from Blue Skies Partnership. It's a leading accountancy firm that looks after people working in the entertainment sector. And between us, we're going to try and talk you through some of the tax issues that you will face if you call yourself a freelancer. Now, would you all describe yourselves as freelancers? Yeah, okay. You may be aware that the industry is becoming more and more casualised. There are still some full-time jobs around, but generally, if you want to work in film and TV particularly, you're going to find that you spend quite a lot of your career working as a freelancer. And for freelancers, one very important factor is whether or not you can recover your business costs, right? That's travel and subsistence, buying equipment, buying consumables, everything from gaffer tape to pens. One of the ways you can do that is by working either as a self-employed sole trader or working as a personal service company where you become your own limited company. And we're going to talk about both those modes of work. Tax is the big issue, and it's only you recover your business costs through the tax system. And for tax purposes, your employment status is really, really important. Now, you call yourselves freelancers, but actually, in law, the word freelance doesn't mean anything. You won't find it in any bit of statute or any tax roll. Freelance doesn't mean anything. For tax purposes, you are either an employee, right? So you've got an employer who is deducting PAYE, pay-as-you-earn tax, and you can't recover your business costs except through the employer's expenses system. Well, you can at the end of the year try to recover some of your business costs if you've incurred them as an employee, but it's really difficult. And the only other mode of employment is self-employment, right? You are self-employed. That's two binary conditions that the tax system recognises if you are working for a living. There is a third mode, which is this personal service companies. Anyone in a personal service company or thinking about doing it, right? Okay. There's a lot of reasons not to these days. It's getting less and less attractive. But if you're in a personal service company, you are officially an employee of your own company. So for tax purposes, right, you are not in some third mode. You are actually an employee of your own company. So how does the tax system work out which of these modes you're in, either employed or self-employed? There are some big tests that are applied, and there's lots of little supporting tests. But there's no tick box exercise or point scoring system that you can use to determine whether or not you are actually employed or self-employed. The really big ones are you under supervision, direction or control of a client? Okay? So to what extent can the client tell you how to do things, when and where to do them, and push you around? The second one is, have you got mutuality of obligation? What that means is you're in a relationship where you expect the client to give you work, and the client expects that if you're offered work, you will always accept it. Okay, so that's the second big test. The third big test is, are you obliged to provide the services personally? And the test for that is whether or not you can send a substitute. And legally, if you can send a substitute, even if there's a qualification to it, I mean, obviously the client would want to know the substitute is able to do the job, is competent and has the necessary skills. But if you can send a substitute, right, you've probably passed the mutuality of obligation test. There's a fourth big test that applies very much in our sector, and that is whether or not you have multiple engagers, multiple clients. If you work for the same client for a very long time and don't work for anybody else, that's actually quite a strong indicator that you're in an employment relationship. So what Hmrc look for as a rule of thumb is if they ever investigate you to determine what your tax status is, they would expect to see roughly 10 separate engagers in the previous 12 months, which for some people is quite a lot. You know, if you're lucky and get a long contract on a soap opera or a big feature film, you tend to think to yourself, well, I'm still self-employed, I'm still a freelancer, I've just been very lucky to get this nice long contract, and I know I've got income for 3 months, 6 months, or however long it is. So those are the really big tests for employment or self-employment status, okay? Personal services, mutuality of obligation, multiple engagers, and under supervision, direction and control. Now in our sector, most workers who are doing what you do tend to pass enough of those tests to be treated as self-employed. But there are other tests Hmrc uses to support its decision. For example, have you got a business bank account? Do you actively market your services? Do you have a financial risk? Do you provide equipment? Do you work away from the engager's premises? And a range of much smaller, less significant tests, but they all add up to what an employment judge once described as a picture. And having painted in all the details of the picture, you stand back and you look at the relationship between the worker and the engager in a kind of holistic way. And that's how a judge, who's the final arbiter in tax cases and employment law cases, that's how a judge would actually determine whether you were self-employed or not. If you are self-employed, you're then in a position where you can do self-assessment tax returns once a year, and you can deduct from your profit, right? You can deduct from your income your business costs, legitimate business costs that are incurred wholly and exclusively in pursuit of your business. And having deducted those costs, you've then got your profit, and that's what you pay tax on. Now, a lot of people think that self-employment, commonly called being a sole trader, self-employment is a big tax dodge. Actually, it's not. You pay the same income tax as everybody else does after you've deducted your profits. You pay slightly less national insurance as a self-employed person. Instead of 12.8%, you pay 9%. But the reason you pay less national insurance is you actually have a smaller right to benefits than employees have. So there's still a differential there. The big difference is that as a self-employed person, nobody is paying national insurance as your employer. Because if you're employed, your employer, on top of deducting your national insurance, will pay 13.8% of your banded income, right, as national insurance contribution from the employer. So that's where the tax difference is. But for the individual, the tax you pay and the national insurance that you pay as a self-employed person look pretty much the same as you would pay as an employee, with the exception that you're able to deduct your business costs, which is absolutely crucial. Now, there's a lot happening around employment status, and I'll share with you a bit of employment law, okay? For employment law purposes, there's a third category, or a third definition of employment status. It doesn't apply for tax, but the third definition is that you can be a worker. Now, what does it take to be a worker? Well, either you're an employee, and that automatically makes you a worker, or you're a self-employed person who is providing personal services to someone who is not a client or customer of your business. And that definition actually applies to a surprising number of people who work in film and television. And what worker status gets you is holiday pay, gets a number of other things. It gets you the national minimum wage, it gets you fair treatment under the Agency Workers Directive, the Part-Time Workers Directive, it protects you against discrimination at work. But crucially for people in this sector, it gets you holiday pay, and on top of your fee, you should be asking if you are a worker, which most of you will be, for 12.06%, 12.06% of your fee as holiday pay. And there's a legal obligation for engagers to pay it if you can prove that you're a worker. But that's employment law, not tax law, okay? For tax law purposes, I repeat, you're either employed or you are self-employed. Now, there's some big changes coming up in the world of employment law, one of which is that the tests for your status under employment law could well be aligned with the test under tax law. And there was a government white paper called the Good Work Plan, published just before Christmas, that proposes doing exactly that. What this might do is to take people who are workers, right, doesn't mean anything for tax purposes at the moment, but it will lift them up into the employment category, right, for tax purposes. And that means that a lot of people who are self-employed in this industry might be threatened with working on pay-as-you-earn on every assignment if they are defined as workers. The downside of this is you can't reclaim your business expenses. And we've already seen in a number of public sector employers, particularly the BBC, where there was a big change in April 2017 about the way they treated personal service companies. We've already seen a new type of contract where you're treated as an employee for tax purposes, but for employment law purposes, you get no employment rights. Now that, to a lot of people who are suffering from that, feels like a big fiddle. You're paying loads more tax, it feels, because you can't recover your business expenses, but you're excluded from the employer's expenses system because you're not treated as an employee for employment law purposes. So it's kind of a case of watch this space and see what's coming up. So I've tried to describe the very subtle judgment that is made on an almost daily basis in our business about people's employment status and whether they should be paid as sole traders or whether they should be taxed. If you work as a personal service company and one hand went up, there is also a determination to be made by the engager, who in the public sector at the moment has to work out whether there is actually an employment relationship between you and them. And if there is an employment relationship, they are obliged to deduct the equivalent of pay-as-you-earn income tax. This changed, as I said, in April 2017. From April this year, in the private sector, the same rule will apply, that if you're working through a personal service company, the engager is legally obliged to determine whether or not there might be an employment relationship, and if there is an employment relationship, they must deduct PAYE. So we're seeing quite a lot of big changes happening in our sector. I'm not suggesting anybody in our sector who claims to be self-employed is not legitimately self-employed, but what we're seeing is a change in the tests that are applied, and this is probably going to change the status of some people as time goes on. Last thing I'm going to say before I hand over to Kenny, all right, is that as a result of the changes in April 2017, Hmrc, the tax authority, have now published an online checking tool. It's called CEST. It's Check Employment Status, CEST, online. Most public sector engagers who are currently covered by this change in personal service company rules, most of them are using this, sometimes quite slavishly, and if it says you're an employee, they put you on PAYE. Okay? They're using this same test to do not just personal service companies, but to do people who are sole traders, self-employed sole traders or freelancers, because they've always carried the tax liability for sole traders. You know, if there's an employment relationship, they've always been legally obliged to deduct income tax and national insurance. So from April this year, beware, there are going to be some private sector engagers, small production companies, who don't have a lot of resource and support. They won't have a legal department. They probably haven't got any HR people, but they're going to realise they're now under a legal obligation to check the relationship they have with personal service companies, and if they think there is an employment relationship, especially if they've used the rather flawed Hmrc tool, they're probably going to try and put you onto PAYE, irrespective of the fact you might have worked through your personal service company for years or decades. So, the employment status bit, really important. The fact you think you're a freelance does not mean that you are self-employed for tax purposes. Every employment or engagement, right, is judged on its own merits, and that the court of law would look at each single one and could make different decisions on different engagements. And I often speak to freelance members of BECTU who are saying, I've just been put on PAYE, what's going on here? I've been a freelance for 30 years, and I have to explain, sadly, right, the fact you've been a freelance for 30 years doesn't mean you're freelance for the purposes of this next engagement that you're about to do, and the engager has made a decision. There are ways to challenge it and fight it, but at the end of the day, if you're a freelancer and somebody offers you work and they put you on PAYE, there is no silver bullet you can use, right, to avoid all the deductions and to avoid the extra cost of your business expenses that you can't actually recover as an employee rather than a self-employed worker. There are mechanisms at the end of the year when you do your self-assessment to try and get back business expenses and to try and actually argue with Hmrc that you shouldn't have paid income tax in the first place, but they're really difficult, and Hmrc do not make it easy for people. The background to some of the changes we're seeing on employment status is actually the Treasury pushing hard to get more and more people into the net of pay-as-you-earn income in part, they are doing this for the right reasons. And the right reasons are we've got this massive gig economy out there where, unlike freelancers in this sector, people are defined as freelancers when actually they're very obviously like employees. You know, if you work every day of the week in the Sports Direct warehouse at Snaresbrook, right, every day of the week, there's no other engager, you've never worked for anybody else. If their phone rings, you've got to say yes, because you know they'll blank you for a fortnight if you don't accept the shift, right? You really look like an employee. And actually, the government is quite right to deal with these abuses of employment status. What they're wrong to do is to disrupt a long-standing arrangement in the film and TV industry, which runs on freelance labour, where people are legitimately self-employed. The benefit they get from self-employment is not a tax fiddle, it's the ability to run their small business on the basis that they can recover their business costs before they pay their tax. That's how it all runs. And if we see a clampdown on self-employment in this sector, I think it's going to cause a massive disruption to the way that things work. And it's going to be really painful, not just for freelancers who get caught out, but it's going to be really painful for the businesses who at the moment have a business model that is dependent on come-as-you-go labour, right, who can be hired at the drop of a hat and can be dropped very quickly, as we all discover. As I say, this thirst to try and sort out the gig economy could have quite wide ramifications in our sector. Anyway, I've done employment status to death, but it's important you understand that things are moving in the background, nothing to do with our industry, and there's one potentially very big change coming up that I'm going to talk to you about a bit later. But in the meantime, Kenny Sykes is here from Blue Skies Partnership, leading accountancy firm. Please. And Kenny's going to talk a bit about how the economics and realities of being a self-employed freelancer work, and you're probably going to touch just a bit on personal service companies, aren't you?
Yeah, I think, is this, okay, perfect. Hello, guys. I think Tony had really quite brilliantly covered a lot of the points that are coming up in your industry at the moment, okay? If we look at, as a limited company, as somebody who is self-employed, partnership, limited liability, the fact of the matter is the same in that the government, as Tony's already mentioned, is really quite aggressively pushing you to be swept up into a PAYE landscape, okay? Really, really aggressively. There is an awful lot of changes that are coming up in the, on the horizon at the moment. And what that's really going to mean is it's more important than ever that actually there's teamwork with everyone else. We work very closely with BECTU on this because everybody working as a team means that there's more influence to actually help your industry, okay? Now, I think it's probably easier that we speak in relation to sole traders, the changes, the differences between a sole trader and limited company, because Tony's already covered quite a lot of what I would have spoken about. Now, how many sole traders do we have at the moment, although, perfect, okay. And do we have any that are just going to be coming into the freelance world that are currently PAYE? We do, okay then, cool, so I'll cover both. Very briefly in terms of what your obligations are if you're going into the freelance world, okay. You have an obligation to complete a tax return. I hope all of you guys know this that are freelance already, okay? As you are earning untaxed income, you must declare that, okay, in the eyes of Hmrc. Now, because of the wide diversity, really, and the range of expenses that can be claimed, you're going to be in a real position where you can reduce your tax bills. And that's, to be honest, why Hmrc and the government do not, on the whole, like freelancers, though they're vital to the economy, okay, vital. They want you to be PAYE, okay? For you to be self-employed means that you carry risk, okay? And that's what, when we look at risk, we have to look at the benefits of you being self-employed in the first instance, okay? It tends to be more lucrative, okay? But with that risk, what we need to look at is actually taking advantage of it with will be expenses, okay? Now, the expenses that you're going to be claiming as a sole trader versus that of a limited company are, on the whole, they're quite similar. Okay, a limited company, which I'll come on to later, tends to be much, much more involved, okay, and very, very particular in terms of what expenses can be claimed, okay. As a sole trader, what we would be expecting you to claim, based on your industry, and I base this on predominantly the media industry, okay, which is why we're all here, is that you would be claiming your research costs, I would expect, okay, your travel costs, your location costs, when you're on a recce, for example, you may have accommodation costs. You may be paying subcontractors if you're running a production. Okay, lunches, networking and such like. What we really want to do is make sure that you claim those expenses legitimately, successfully with Hmrc, okay, to reduce the tax bill, okay, to pay the amount of tax that accurately reflects your circumstances, okay. What you don't want to do is carry all of the risk of being a freelancer and not actually take advantage of the fundamentals really of why you would be a freelancer in the first place, which is the flexibility, the ease of going from production to production, from company to company, okay. Now, when you're looking at actually your filing obligations, you have to complete a tax return every year. There is no difference between you being a sole trader or a limited company for that. You must file a personal tax return. Okay. I think it may be worth mentioning, I think, Tony, we maybe talk about making tax digital after, which is going to affect every business in here from April 2020, realistically, okay? Nearly every business, okay? But for the time being, what we look at, what has to happen is an annual tax return as a sole trader, and as a limited company, an annual personal tax return as well as company accounts, okay? Now, as a limited company, Tony's already covered actually the fundamentals of really the limitations and what would be expected, okay? I would be expecting as a limited company that you would be claiming expenses that are wholly, necessarily and exclusively for that business, okay? And there's a slight change in that with compared to that of a sole trader, in that as a sole trader you can claim a percentage of your costs, okay, a percentage of them based on your business usage. As a limited company, technically you should only claim expenses that are entirely to do with your business, okay? Now, when we look at your industry, you can claim a wide variety, as I've already said, of expenses, because you go in and watching a film, it might be a great film or a terrible film, that should be claimed because it's research. You have aspirations. It doesn't matter what type of role you're in within the media industry, it's entirely fluid, okay? And based on that, you should be claiming those type of expenses, okay? Now, a limited company is significantly more involved than a sole trader, significantly more involved. The amount of paperwork, okay, is much, much, much greater than that of a sole trader as it stands, okay? As a sole trader, I'd mentioned you have to complete a tax return with the deadline being the 31st of January, okay? And it runs per tax year, okay? So the tax year we're in at the moment is the 18-19 tax year. So it's the 6th of April 2018 to the 5th of April 2019. The deadline to complete that tax return is the 31st of January 2020, okay? Lots and lots of time. As a limited company, it's not just the personal tax return that you have to complete, okay? It's the company accounts, there's the confirmation statement. You need to make sure they're all done. The fines are much greater. The benefits of a limited company actually link in terms of there's a reason why people would be a limited company, considering there's so much more paperwork. Because you'd ask, why should you be a limited company over a sole trader if there's all this extra work to do, okay? If you are a limited company, you pay a different type of tax to that if you were a sole trader, okay? If you're a sole trader, you would pay tax at 20% or 40%, okay? And you then have national insurance at 9%, or it would be at 2%, so it would be effectively 29 or 42%, okay? If you're a limited company, you pay two forms of tax now, okay? A limited company, you pay currently 19% corporation tax, which is infinitely more attractive than paying 42% personal tax, okay? But, and this is where it becomes more involved, is as a limited company, you are taxed on the money that you take out of the business for you personally, okay? So if we think about, and I've already mentioned in terms of the expenses I'd expect to be claimed for you as a sole trader, as a limited company, let's think about the expenses that you have to effectively that are not work related at all, okay? So let's look at your mortgage costs, your holiday, some utility bills, kids costs, pet costs, all of these things, okay? It will cost you personal tax for you to take that money out of the company to live, okay? Now, over the past probably about 4 years, what we've noticed is that it used to be, I might recommend somebody to be a limited company if your income levels were £40,000 a year, okay? Now, I'd be looking at a turnover around 60 grand a year. Okay, this is very average, it's case by case basis, but I'm going to be looking at around 55 to 60 grand a year for it to be worth your while actually being a limited company. Okay, the rates of tax are £2,000 a year tax-free that you can take out of the business. Okay, but after that £2,000, which by the way, last year was £5,000, so they keep reducing it year by year. Okay, shock horror. That's Hmrc. Obviously, they want more money. Okay, you then pay 7.5% tax. Okay, that's for about an extra 20. Works out to about an extra 27 grand. Okay. After that, it starts to significantly increase, and this is where it's very, very important that if you're a limited company, I would strongly suggest that you get an accountant, okay, for not only tax planning, and because of the borings, it's absolutely mind-numbingly boring to complete the paperwork for limited companies, okay, but actually for tax planning, it's so important, because after 7.5%, you start to become a high-rate taxpayer, okay? That's 32.5%, okay? Over 150 grand a year, if you're ever in a position to take over 150 grand out of the company, okay? That's 38%. So what you see is, yes, 7.5% is very attractive, and 19% corporation tax is very attractive, but when you start taking more money out of the company, it becomes really, really important that it's done in a tax-efficient way, because you can be paying at times more personal tax than you would in corporation tax. Okay, and you know, looking at examples, somebody might earn 250 grand a year now and be worse off as a limited company because of they need to take every single penny out of the company in order to pay their mortgage and kids' fees, etc., etc. Okay, so as a limited company, there are great benefits, but it's infinitely more complex and actually requires really quite significant tax planning to make sure you're in a position where you're making the most out of the cash and keeping that cash in your pocket where it belongs. Okay, Tony, I think that's probably it with regards to the sole trader and limited companies, to be honest. Okay. Do you want to talk about making tax digital? Or?
Yeah, I'll do that. Right, there are a few changes coming up in addition to the one I've warned you about in terms of personal service companies. Making tax digital, what Kenny's referred to, essentially this will require every small business to make 4 tax returns each year. Now, at the moment, you can do your tax return using an online portal. It's relatively straightforward. In future, you will have to keep an electronic record of every single transaction. So that's every invoice you've raised, that's every remittance you've received, and that's every bill that you've paid. This will have to be stored in software which will talk directly to Hmrc servers. So there's no longer going to be a digital interface that a human can use. So you have to actually buy software to do it. The first phase of making tax digital starts in April, where for the quarter that runs from April to June, anyone who's registered for VAT and is over the threshold of £85,000 will have to use this new system to make their VAT return. So I'll just ask quickly, is anyone still registered for VAT in the room? Right. Come and tell me why afterwards, because you need a quite good reason to do so these days. I used to say to people at talks like this, go and look at the flat rate VAT scheme, right? Which is a very simple form of charging and paying VAT on a calculated rate, right? Which is different for every profession, but a calculated rate that actually meant that people in our sector probably got a bit more money back than just reclaiming all the VAT that they had paid. About 3 years ago now. Yeah,
April 2016.
Yeah. 3 years ago, the concept of a limited cost trader was introduced, which actually means that most people in our sector cannot use the flat rate scheme, and they have to go on to the much more complicated plain vanilla VAT, which involves an awful lot of record keeping and an awful lot of reporting. You can still recover your VAT if you want to go through all the hoops of doing the non-flat rate proper VAT, but it does require quite a lot of administration. The limited trader is someone who spends a year or less than 2% of their turnover purchasing things like travel and subsistence, capital equipment, and items that are not for sale. So basically, that's £1,000 a year is an awful lot of gaffer tape. You might just hit the £1,000, but by and large, most people find that they don't hit the £1,000 figure. If they do hit may not be 2% of their turnover, and in those circumstances, they can't use the flat rate scheme. So there's been a lot of deregulation from our sector because it's really quite as advantageous as it used to be. For 2020, Kenny says it is now likely, not absolutely certain, but it's now likely that they do 4 returns a year using this electronic gateway rather than just going on to a web page and typing in the numbers. That could apply to every single small business, and that means anyone who calls themselves a freelance, is self-sole trade, working as a personal service company, will be obliged. They may not want to take up the service as an accountant. I have one here. But if everybody who is currently doing self-assessment as a freelancer in our economy, and there's something around about 5.2 million of them, if they all try and find accountants to do 4 tax returns a year, the accountancy profession will not have the capacity to do it, all right? Much as they might like to. So a lot of people are actually going to have to buy the software and do it themselves. BECTU is currently in discussion with a major software provider to see if we can offer members a really valuable discount on one of the leading industry products that's out there at the moment. It's being modified to do Making Tax Digital, and I hope to make that offer to members at some time over the next few weeks. For those of you who are VAT registered, be aware that on the 7th of July, 7th of July, when you do your first quarter return, right? You will need to use an electronic gateway to make your VAT return. You can't go to the 9-box VAT screen that you may be used to using, right, if that's how you've done it in the past. And you may want to talk to an accountant, okay? So you've got options. And as I say, from April 2020, you may all find you're having to do this for income tax purposes as well. One other change coming up. At the moment, we have a set of guidance notes for the film and TV production sector. Anyone familiar with it? Right, okay. It's kind of the tax Bible, and if you go to any production office, they'll have a really well-thumbed copy of it on the desk somewhere. Crucial to this guidance document is a list of grades, right, some of which are treated as being automatically self-employed, some of which will be treated as self-employed, provided you meet conditions that are laid down. And very often the conditions are things like supplying equipment or working away from the engager's premises for part of the assignment. What Hmrc are saying is that they want to reissue those guidance notes, but there will be conditions attached to every single job role in there. So people who historically have said, oh, well, I'm on Appendix A of the guidance notes, people will find that their engagers are saying, excuse me, there's a condition here, there wasn't one previously, but to prove that as a producer you're automatically self-employed, you're going to have to meet the conditions that are laid down. And at the moment we're talking to Hmrc about what those conditions might be on a job-by-job basis. The guidance notes have been threatened with review for a very long time, but if you follow the papers, you will realise that there have been a number of cases of on-screen presenters, some of whom earn an awful lot of money, some of whom don't actually. I mean, I've been dealing with some on-screen presenters for BBC Children's, for example, who are earning less than any of you would get out of bed for, quite frankly. But Hmrc has spotted these people. They've run a number of cases, and they have so far been quite successful in demonstrating that these people who were working through personal service companies were actually employees of the BBC in particular, and therefore they should have paid a massive amount of income tax, which they haven't, because their accountant has said, look, to take money out of your personal service company, you should pay dividends and don't pay yourself a full wage as an employee, even though you're automatically an employee of your own company. And because the sums of money have been quite large, Hmrc have been looking around the rest of the sector, and that's what has spurred them on to review the guidance notes that affect behind-screen workers. My personal view, speaking to hundreds and hundreds of members a year about this, is actually behind the camera, we're pretty much okay in terms of personal service companies. However, there has been a tendency for engagers, and this is particularly true in the private sector, when they look at the relationship they have with you, the worker, and they think, oh, I'm not sure, you might be an employee and I might have to put you on PAYE, you'll very often hear the phrase, oh, but of course, if you bill me through a limited company, I won't have to take any tax off, okay? The reason that they are saying that to people who then often go off and set up personal service companies is the engager, who's usually got a bit more experience of these subtle judgments on employment status. The engager's a bit windy and thinks, oh, you might be an employee, but if you bill me through your personal service company, you carry the tax risk, all right? So you're happy, you get all the money, I don't take tax off you. I'm happy because I don't carry the tax risk, but if you get caught by Hmrc, you're going to face really big penalties. The last big case against the BBC on-screen person was Christian Ackroyd from BBC North. Her bill was over £500,000. So you can understand why Hmrc want to go after these people, all right? We're sort of a bit like the baby being thrown out with the bathwater in some respects. Even though behind camera, we're fairly well compliant with tax laws. Hmrc think there's something about the sector that indicates there's more money to be raised, right? And that's why they are looking very carefully at our guidance notes. So those are the two big changes coming up. Making tax digital, 4 times a year, got to be done electronically. The union might get a deal for some software that people can use. And the change in the film and TV production industry guidance notes may put a number of grades, nominated grades, in a position where they have to meet new conditions in order to be treated as self-employed. But kind of watch that space. That's going to happen probably within the next 6 months, is what Hmrc are telling us at the minute. Now, we've got about 10 minutes left. I hope that's been useful so far. We've got a hand mic over there, and I hope to hear some questions from people about any aspect of tax in the industry. Thank you very much. Go ahead.
Thank you. You mentioned obviously about VAT going digital. Is that likely to happen for self-assessment as well?
Yes, I'm afraid the Hmrc's plan is that once they've rolled out making tax digital for VAT, they're going to try and roll it out for people's self-assessment and for filing of accounts at the small company level. So personal service companies will be affected by it. Their target, although it hasn't been legislated for yet, their target is April 2020, but there's been such a pushback because this doesn't. There are some benefits to what Hmrc are doing with making tax digital, but for a lot of people, it just means more work. And the longer-term benefit, we suspect, is that this will enable Hmrc to collect tax not once a year, as they do on self-assessment, but 4 times a year on a mandatory basis. If you want to use making tax digital for self-assessment, you can actually do it.
From April 2020, but the thing, what's quite interesting is that Hmrc had said initially, when they just put this out and didn't tell anyone how it was going to happen, they had said that there was going to be free software for everybody involved. It turns out there is, out of the 150 odd providers, 0 free software. Okay, shock horror again. That's Hmrc. So it makes it very, very difficult for people to actually. I think we were discussing before. It's going to be, quite frankly, chaos for about a year, and that goes with regards to IR35, which is how you're going to be engaged by your production, as well as making tax digital. It's going to be a very scary time for everybody. And to be honest, I don't expect much from Hmrc, considering the way that they've actually handled this for the past 3 years. You know, this has been deferred, delayed, and then they've just kind of said to everybody with 6 months' notice, hey, this is going to happen actually from April 19.
Okay, thanks for the questions. Another question over there?
Yeah, I've seen some contract wording which the wording kind of states that I will accept or indemnify the client against any liabilities that the tax office might deem due in future, which I don't really think is fair. I wonder if, am I safe to sign those contracts because those wouldn't be, can they enforce those lines?
Well, if you sign a legally binding indemnity like that, you do run the risk that if there is something dodgy about your tax status and the engager gets into trouble with Hmrc, they may come back to you and recover as damages whatever penalty that they have suffered. Now, I've got to be honest, Hmrc don't do that many inquiries, all right? They're going to find it easier to spot irregularities once we're doing making tax digital. I think we agree on that, aren't we?
Most definitely.
But they don't have much in the way of resource, and I'm not aware of a member of BECTU who has ever had that sort of indemnity clause invoked by an engager. But that's more because Hmrc haven't caught them out than the fact the engager doesn't really feel that they should legally do it. The problem as a freelancer about contracts that have unpleasant terms in them is really if you don't sign the contract, you don't get the gig, and you're free to turn it down. But we don't have the same raft of protection that employees have. If you're self-employed, we don't have the same raft of protection employees have, with lots of employment law that tells, that it actually states what the employer can and can't do to you. What the employer can and can't do to you as a self-employed freelancer is not restricted in any way, provided the contract is legal, and there's nothing illegal in there.
Yeah.
So my advice is try and get it out, and ask if they've done a determination of your employment status and if that is the reason they've put that clause in. If they have done a determination, they've probably used the online checker, and what we're advising members is if you've been put through the online test by a potential engager and you've popped out as maybe an employee or maybe indeterminate, big question mark, then you should ask to see the audit trail that the engager will have printed off at the end, which is a list of the questions and answers that they have fed into the checker, and you can then go to the checker, you can feed in your own answers to the questions and see if your engager's got it right. Yeah. Okay, hope that helps. Right, any more questions? Right, microphone's on its way.
How do the engager know how many other employments do you engage with? Is that why you need to?
They don't. Right. And this is a big failing in the Hmrc online checker. It does not ask any questions about other engagers.
Even if they ask is private, who else you work for?
Well, I mean, the test of this is what Hmrc might determine in an inquiry, and if you've got evidence you've worked for multiple engagers, that is a helpful indicator supporting your claim to be self-employed and not an employee. All right? But in the current climate, if someone's looking at you and thinking, are you self-employed, this checker, online checker, will not allow them to take account of you having multiple engagers. If they're prepared to trust their own judgment, which even the BBC has often not been willing to do.
No,
you've done a lot of BBC cases. And they go with the checker, you may find that despite having multiple engagers, you are deemed to be on pay-as-you-earn as an employee, and no account has been taken of the full range of indicators. Kenny's dealt a lot with the BECTU on this.
I mean, they have said that they're going to try to improve their SES test. They acknowledge that it is flawed, to say the least. We've done a lot of work with the BBC when this first happened, because if you can imagine the amount, as I said, this is absolute chaos. Because what you notice, and this is going to happen nearly 100% unfortunately from April 2020, is that you will see that they will say, okay, well, we don't want to take the risk, we don't want to be financially liable for this, and therefore we're going to play it safe and go as per the SES test. The SES test is inherently biased. Okay, you start off at a complete disadvantage because you have a production company that doesn't care about you, to be quite honest, okay, and wants to be on the right side of Hmrc. And it also, they're not helped by the fact that it completely omits really, really fundamental criteria that proves your self-employment, such as mutuality of obligation, which Tony had alluded to earlier, which is you do not have to take their engagement, and they do not ever have to engage you. So it's about working together and trying to speak to somebody on a common level to try to get the best result. But to be honest, you've got to hope that the PM, the line producer, whoever it is that's dealing with that SES test, or the HR department, that they understand your personal circumstances. It's actually a very good suggestion from Tony, which is ask for the audit trail, because it quite literally states all of the questions on there and what their answers are, and you can pick that apart and say to them, actually, this doesn't make sense, this doesn't make sense. They can go back, change it, and then it can, at that point, if it decides to say, yes, can be engaged on a self-employed basis.
Okay, right. Was there another question somewhere there? Thank you.
Yeah, so I just want to quickly ask, I wanted a bit of clarity. You said right at the beginning about what you can claim, and my accountant, so I'd sort of put on there some films that I'd researched because I was directing a documentary at the time. I'd had various meetings, so I'd paid for the food. And they said, you know, food and sustenance, percentage-wise, because actually you got benefit of it, even though I wasn't drinking alcohol or having desserts or anything. It was quite basic. But then they said, oh, they're going to benefit from it, or going to the film, it's entertainment, and they sort of wanted to put all these percentages in place.
Okay, hospitality, a very tricky area, isn't it, Kenny?
It is, yeah. Okay, so this is one of the big differences actually between you as a sole trader and you as a limited company. Okay. Are you a sole trader? Yeah, okay, this is the reason why it's popped up. If you're a limited company, then you can claim that cost and you would claim it entirely, okay? It would be called networking, effectively, or a bit entertaining, okay? It's a bit of an odd one because entertaining, as a limited company, you do not receive tax relief, okay? But it is very important it's claimed as a company expense. I had said to you earlier that you are taxed for every single penny apart from $2,000 you take out of a limited company, okay? If it's classed as a business expense, it means you don't get taxed personally on it. So as a limited company, if anyone's going to be a limited company in the future, entertainment is a very important legitimate expense which should be paid through the business, okay? As sole traders, it's different, okay? There's been some arguments in the past, and actually, to be honest, Hmrc, it depends on the person that is investigating. Tony had mentioned quite rightly that investigations are quite low but do happen, in that you could argue that you have gone out for a meal with somebody, and it is cheaper in London to go out for a meal with somebody than it is to actually rent an office space to have the actual meeting itself, okay? There are different arguments behind it. What your accountant has said is not wrong in that there should be a personal use element, okay? But I would most certainly look to be claiming costs that are clearly business related, because you would not be going out for this specific meal if it wasn't for the fact that you were talking to them about the film, okay? But it does become a really grey area, and it's not a simple question of yes or no, because your industry is so intertwined with you personally and your personal relationships. That's what the industry is built on, relationships. So your best friend is also your boss, potentially, you know? So with these things in mind, I would be definitely more so looking towards claiming costs like that, but you need to look at the whole picture of it.
So
Okay,
how do you evidence that?
So
how do you evidence that?
Okay, in terms of it specific to that, I would say what we advise our clients, for example, is to have on the receipt, because you are not going to remember this 3 years from now. You have on the receipt who you've met, why did you meet them, okay? A lot of the work that we do at the moment is really based on engagement status, when this is such a big topic at the moment. It will affect everyone soon, okay, everyone. Is that you should be, even if you're not currently engaged, to claim the expenses that you rightfully should be, when you're not in work, you should be documenting what you are doing. In your calendar, met so-and-so for a coffee to discuss this. If you're into script writing or if you're into doing features, you should be noting down who you're sending the script out to. So just because you're not working doesn't mean you're not freelance in that period. And in that time that you're not working, where it doesn't clearly demonstrate that you should be claiming those expenses, you should be clearly documenting why did you get that taxi at 7 p.m. It sounds laborious, but to be honest, it's much less laborious doing it there than in 3 years looking in your loft for all these receipts, trying to work out what you did on a Friday night.
Okay, right. That answers the point, I hope. I'll let you into a secret about accountants. They're a bit like lawyers. If you ask the same question to enough of them, you'll eventually hear the answer that you want. But don't necessarily bet your house on that one, all right? Look, I'm going to wind up because there's another session due to start. This has been organised by BECTU, the Trade Union for Film, TV, Theatre and Events Workers. We have a stand, J67, which is just there. We also issue a tax guide. It's for members only, but you can all have a copy. And Teresa sitting at the back will happily provide you with one. Do think about joining the union. We do a lot more than just talk to people about tax. We provide public liability insurance at an unbeatable price. We look after people and answer contract questions. And we also collectively bargain, believe it or not, on behalf of freelancers with the employers' associations like PACT, who are, they have hundreds and hundreds of production companies in membership. We advise on rates of pay, and we do health and safety, pensions, the whole gamut. So think about joining the union. There's a special offer at this show. You can join for the first year for £90, which is practically giving it away. And as I say, as you leave, do remember to collect your free copy of our tax guide. Thank you very much for coming along. I hope you found it useful, and enjoy the rest of BVE. Bye-bye. Thank you.